Hello. Good morning, everybody. Thank you for being here for our next panel dedicated to social bonds. This year we are celebrating the 10th anniversary of the social bond principle. So the natural name for panel was co-benefits, climate co-benefits and social bonds, because we think that if we have done already 10 years of activity in the social bond market, we need to think about what is coming next in the coming 10 years. And we believe that probably the link with climate co-benefits is going to be one of the very important activities of this segment of the market. I would like to start our panel by introducing very briefly the activities of each of the panelists related to social bond activity itself. So starting with Lorenza, for instance, that I have in my left, working in a very renowned Italian institution. You've been active in the three main segments of the sustainable bond markets in Greece, in green, social, and sustainability. Would you please let us know a little bit what is the importance in your program of the social bond market?
Thank you, Arturo, and thank you for having me today. I'm Lorenza di Cintio. I'm responsible for the capital markets and sustainable finance activities at Cassa, depositi e prestiti. A couple of words about who we are and why I'm sitting here today. So CDP is the Italian National Promotional Institutions. So our mission is to support the country's development through financing initiative of public interests, such as social infrastructure, energy transitions, and in general, social initiatives. So capital markets are central for us in this role. So we are a frequent issuer both on the euro and dollar markets, and as you mentioned, an early player of the ESG bonds. We launched the first Italy social bonds back in 2017, and since then we've built a solid track record on this market. All our bonds are aligned to the ICMA principles, of course. So what I would like to highlight today that we also, as a part of the SSA community, I think that we operate at the intersection of public policy and capital market with the objective of channel capital in a tangible initiative that have a real and concrete impacts on the real economy. Above all, we are also very focused on innovation. So for in these very days, we are launching a blockchain-based reporting on our last green bonds. This is a very innovative tool for our allocation and impact data for the investor in order to better verify and look at a more transparent way the data that we use to report. So it is something that we, I think, talk about today in the panel. Thank you.
Thank you very much, Lorenza. Eila, would you please tell us, because, well, working in IFIN and your role in IFIN today, IFIN being a major social bond issuer as well, how important is being this vehicle for you for the financing of IFIN itself?
Yes, thank you, Arturo. By the way, great to be here. Lots of former colleagues and peers and friends and everything, so I feel like a fish in the water in this event. Yes, for IFIM, obviously, there's kind of two sides to the story. IFIM was established 20 years ago with one single purpose. It's to raise funds for Gavi, the Vaccine Alliance, who again does vaccine programs in developing country and for children in particular. And they buy vaccines, they manage vaccination programs in these countries and so on. And they provide also sort of, for example, with COVID, they were working with the pharma companies to provide vaccines, and they can do what I think most of us in the financial world call offtake agreements to the pharma companies, who can then develop vaccines knowing that there's a buyer. So it's an SPV which has no staff. It has a voluntary board which is sometimes quite a lot. And although it is very social, because nobody would question the socialness of this purpose, of course, but it has, for example, not yet signed off the SPPs, and that is because that means there are these reporting responsibilities, which IFIM has not done so far, mainly because it was thought that this is not needed as it is a pure play. But nowadays, if I may just go in a little bit wider, but already this morning we have heard quite a few times the words impact and data, and just even the clarity of purpose, I think, is not yet enough today. You need to provide information and data and impact, because investors need this. Some need more, some need less. They may all have different criteria. But even in my previous life as EIB's head of capital markets, I never met an investor who didn't like information and data. So this is really a key. And I think this is something that we are working on with the IFIM board and with Gavi to try to see how we could provide this so that we could actually sign off, for example, on the social bond principles, because for many investors, this is a tick in the box. If you want to buy something for your ESG portfolio, then this needs to be done. And I think the principles is very important in this respect, because it is kind of globally recognized. It suits everybody, whatever your jurisdiction is. It's kind of common standard for everybody. Everybody can use it, and I'm very proud of it. I was the first chair of the principles long time ago, so I'm very proud of where it has come now.
Thank you very much, Eila. I was mentioning that this year is the 10th anniversary of the social bond principles, and during these 10 years, issuers, they were meant to be at the driver's seat of the evolution of the market, the growth of the market. I believe that investors, we are going to see them taking more and more the role of trying to still diversify more and be more present in the social bond market. Felipe, on your side, what do you think the social bond market will represent for the investor community, and how have you integrated social bonds within your different portfolio strategy?
Thank you, Arturo, and hi, everyone. I think, yes, which is interesting about the development in the social bond market is that it's actually completing the story about sustainability. That we tend to be too much focused on the green aspect, but if you think, for example, of the most recognized framework, the SDGs, this is not only about sustainability, it's not only about the green aspect or the environmental aspect. So the other pillar is social. And I think the fact that we have these social bond principles has brought clarity to the market on, about the things that we can do, both as issuers, but also as investors. And at Mirova, the way we approach this topic is basically we have developed an assessment methodology in which we value the impact. And you mentioned before metrics, data, but maybe in some cases more important also, and you mentioned it before, is the clarity of purpose. And we call it in our own methodology, we call this the coherence between the assets and the overall strategy. So when we look at the social issuers, when you think of MDBs or development agencies, the clarity of purpose is very straightforward because, this is part of their mandates, doing social. But I think the more challenging area is when you move into the private sector, because not all private sector companies are supposed to do social or to create social products. So I think, if we want to bring a bit more of trust in the market, I think, some issuers, and in particular financial institutions, I think they have to be more transparent and to create a more robust narrative about the purpose. In other words, how those social assets are actually contributing to the overall social strategy. The same way when we think of, green assets contributing to the decarbonization strategy. I think that's something that the market and the users and investors will benefit if we work in that area.
Thank you very much, Felipe. Daniela, please, if you can tell us a little bit about how you have seen the interaction of your institution, financial institution, with the social bond market, and eventually, deriving from there, do you think that financial institutions, they have a role also in an educational role, I would say, or a combining role with corporations? Can financial institutions help corporations to become also a participant in the social bond market?
Good morning, everybody. I didn't have the opportunity to introduce myself. I'm sorry I was some minutes late. I'm Daniela Antonini. I'm head of Sustainable Funding and Advisory at Banco BPM. Banco BPM, you probably know, is a typical Italian commercial bank. It used to be the third by number of assets, by total assets. Now we are the fifth Italian banks, but you know that M&A is going on in the market, so we will see. From a sustainable perspective, we published our first framework back in 2021, issuing an inaugural social bond. So our bank has been very focused on the social bond side, on the social assets since the beginning. We've refinanced in 2021 a portfolio of COVID loan to SMEs. By nature, Banco BPM is very focused on the territory, financing mainly SMEs. So we have issued so far 3.5 billion of social bond, refinancing mainly loans to SMEs in these socially, economically disadvantaged areas, as well as affordable housing. It means mortgages, which were granted to low-income or socially disadvantaged families with a government guarantee. So, going to the topic, what I see is that the social bond can help also the climate transition. In my experience, in our experience, we saw this mainly in the affordable housing. I mean that when we finance with government guarantee, the acquisition of new houses by poor people, we also offer a discount if the house is energy efficient. So we see both benefits from a social side, because we have a target population of low-income people or families, and on the other side we also improve the environmental impact. The same for the renovation. We also have a specific product to finance the renovation of building, and we know that socially vulnerable people are always also the ones that are vulnerable also to environmental impacts. Another example is our loan to SMEs. We identify disadvantaged areas, but here I must say that this will be the next step, identifying SMEs that are working on the climate transition, like an example that built the grid or work in energy efficiency. So there will be a climate co-benefit also on the financing of SMEs.
Okay, would you say that then that social bonds could be, a tool which can further support climate co-benefits and climate transition? That's what I understand from your answer. And you see housing as a very clear sector where those co-benefits can be identified. Anyone see another sector or some other sectors that could be a good example of social bonds promoting climate transition? I leave it that as an open question. Maybe if you can start, Daniela. That would be
yes, I can bring some more example in our portfolio. When we finance, as an example, healthcare, we have some projects financed big, quite famous big hospitals also here in Milan that are absolutely energy efficient with special attention to the energy consumption. So that is another example. The other one can be the financing of M4. You probably came from Linate with M4, and we financed that project, and it is both social and climate benefit. The issue is that so far, I think we didn't focus on these co-benefits, both climate. We were focused, oh, this asset is social, so it is social. Green, it has environmental impact. I think in the future, we should focus more on this, also in the selection of projects and in gathering data for reporting that, because data are fundamental.
You also see, Lorenza, this as the natural way of the social bond markets to develop, to try to integrate more and more climate co-benefits and participate in the climate transition with a good identification of the outcomes of social bond net proceeds use.
Well, I do see this direction as a natural evolution of the social bonds. But framing from an issuer perspective, I would start from how the projects are structured and designed. So, for example, at CDP, given our public mandate, our activities is, I would say, social by nature. So we often start, because we finance mainly public infrastructure, such as school, for example, school renewable, refurbishment and school or new school is public infrastructure. So in that case, the primary goal is the social aspect, to supporting local communities or a target population. However, most of the time this project generates also environmental benefits. So what I think is that most of the time projects are already integrated between these two aspects, because they are by definition multidimensional. Also, Daniela was telling about new hospital infrastructure that are energy efficiencies. So the same is happening also in, of course, in our investments, in the investments that we financed. But at the same time, this is true at a project level, but it is also true, at least for us, on a reporting level. What I mean is that we try to make an effort so far on the green bond side. So we integrated the social impact within our green bonds reporting, because we had this legacy on our social bonds issuances, and we decided when we went to the market with our first bonds, we decided to keep disclosing the social impact of the bonds in terms of, for example, job creation, maintenance, and economic value to the Italian territories that bonds can generate. And this, at the end, it was appreciated by our investors, mainly, of course, ESG investors. So the point is that we thought that we were on the right way. So we thought that, okay, if the investors give a positive feedback on this, we can probably go further and go beyond on this path. And probably the environmental co-benefit on the social bonds can be the next step. Another example, in 2018, we issued a sustainability hydro bond. In that case, the main focus was the social aspect, the social impact, because it was they were investments on upgrading the water infrastructure in Italy, mainly on vulnerable areas of Italy. But of course, it generated environmental benefits in terms of better water management, so lesser water leakages and a better usage of natural resources. So probably it could have been a green bond, but at the time we decided to favor the social aspect, so to highlight the social aspect. So the point is that integration probably is already here. So it's not stretching the labels, but it's more on recognizing that the underlying investments are really multidimensional. And so this integrated approach probably could also help us as issuer and investors in classifying ESG bonds, because we still sometimes receive feedback from investors on difficulties, for example, on how to classify sustainability bonds, because sometimes they are too green for social funds, too social for green funds, or for example, on social bonds, sometimes the feedback is that cannot, they don't have room in their funds because they are only green. So probably, but I will then ask to Felipe his thoughts. Probably, if we will go to a more integrated approach also on the whole impact, this could help also to manage and to address these challenges that in some cases can hamper the issuer's activities, especially on social bonds.
Thank you very much. Under the investor's perspective, this is the very important side of the market, as we all know. How those changes are affecting your asset allocation in the sustainable portfolios? Are you going to change the way of analyzing social bonds because of the co-benefits being reported in a different manner? Are they going to go to the same portfolios? Are you going to have sub-portfolios? Can you please let us know about your policy there?
Absolutely. We have dedicated green bonds funds. So for those structures, social bonds are not, they are not included in that type of structure. But we have more diversified funds, and in the diversified funds, of course, social bonds are very important. They are part of that. And we also have a assessment framework in which, of course, when we assess a social bond, we are going to look for, classical KPIs like, as you mentioned, job creation, number of beneficiaries, access to education, these kind of things. But we also look at the co-benefits, and we have a framework in which we are able to value environmental co-benefits. And I think what we very often see are, for education, also health, everything that is related to buildings, I think it's easier to make the case of energy efficiency co-benefits. So that's what we see, that's a big trend in the market. But then from our point of view, it's very important to provide a credible co-benefit. And the best way to do that is to actually link that to, well-known frameworks, like, for example, environmental certifications, very well-known frameworks as, remember the top 15%, or remember the taxonomy criteria on EPCs. So for us, stating that there is an environmental co-benefit is not enough. You need to prove it. And the best way to do it is, using the classical frameworks that are already available for the green part. Then something that I would like to see, and we don't see that often, is, for example, issuers working on areas like, for example, food security. If you move into the food security aspect, of course, you are going to produce benefits in terms of, fighting hunger, fighting poverty. But we think that maybe there are some co-benefits around potentially fighting deforestation, potentially ensuring, water ecosystems, biodiversity. So I think those are some areas in the market, areas in the economy that need to be explored. Because, I love hospitals, I love clinics, all these affordable housing, of course, but I think there are some areas that need to be explored.
Thank you very much. Well, IFIM is a social bond pure play actor, I would say. These changes in the way that the social bonds are reported in the use of the proceeds, do you think that they may create some new opportunities for IFIM as an institution as well, or your role in the market? Yeah, if it may be an opportunity reporting on co-benefits from your social bond activity.
Well, in general, first of all, I think I would very, very much encourage reporting whatever impacts you have. And yes, buildings is very clear. If you build a hospital, school, social housing, make it energy efficient, but also don't forget about water management, about waste management and all of those. And if they are good and you have something good to report with a verification, yes, then please go ahead. With vaccines in particular, I think the impacts or the sort of causalities go rather the other way around. I could almost say that if you do anything for climate change mitigation or climate change adaptation, it benefits health. Just take one example. Municipalities are often the ones who are left with the impacts of floodings or droughts, even depending where we are. And drought, for example, or inundations, what a lovely breeding ground for all kinds of nasty insects if you have just flood water floating around for days and weeks. So if you have municipalities who have prepared themselves for dealing with the consequences of such disaster situations, this will also improve the health. And I really say that whatever you have there, put it on the table. Your investors, they may or may not be looking at that particular data, but somebody else might be. And anyways, it all for the good. And social and climate, to me, they are so closely interlinked and correlated that it's almost hard sometimes to separate one from the other, because both impact each other, and there are different, and there's very clear causalities and correlations there. So I would say that if you have, put it out there, and when we work on the IFIM in particular, we'll see if there is something that we can do. Vaccines, they are very narrow area, even of health. So I'll see if we can find anything there, but for anybody else doing social bonds, and if you find climate or other environmental, don't forget about other environmental aspects as well. Climate is not the only one. So just put it out there. Somebody will like it.
I would like to touch briefly, because it would give for a full panel itself, on the just transition concept. Staying with you, Eila, what do you think social bonds should do or can do respect to just transition? Is a concept that they should integrate more social bond issuers and be a path toward co-benefits reporting? Maybe Eila, if you want to.
Well, just transition is one of my favorite terms. It means 100 different things for 100 different people. So, and it also depends whether you look at just transition at the individual level, or at the regional level, or country level, or global level. But yeah, if we talk about just transition, what does just refer to? It refers to social justice, I suppose. So then, how could you even separate social finance from just transition? I don't think you can. It needs to be part of the parcel, but you need to show it, and as Felipe was saying, also prove it. So I think it is, and you can claim it whether you are reporting something about individuals or cities or countries or global. It's really part of the parcel, and just show it. Nobody will be offended by it for sure. And it will be, like I said just a minute ago, somebody will like it.
Yeah, yes, please.
Just a quick comment. The way we see it, so just transition is all the actions to deal with the negative social externalities related to the climate transition or energy transition. And then the challenge we have is that, as you mentioned, there are different definitions, but one of the first conditions to finance a just transition is to have a energy transition. So, you know, if you don't have power utility companies transitioning, if you don't have car makers transitioning, if you don't have industrial companies transitioning, so there is no need for the just transition. Then let's imagine you have a project of a power utility company moving away from coal power. Okay, that means that some people will need to find new jobs, people will need to find different options of living, trainings, and so on. Then the challenge we have is, from a private corporate perspective, the company will say, why should I pay for that? So I think that the question is how, for just transition, I think we don't need, it's not, for me, it's not a matter of definitions. It's not a matter of guidelines and documentation and transparency. It's a matter of cooperation between those companies who are transitioning and those actors, MDBs, development agencies, regions that by their own mandate are supposed to take care of the social aspects. So for me, you know, if we want to develop this thematic just transition, for me, the precondition to see that is cooperation between private sector and, you know, SSAs and, you know, these, government agencies.
Thank you, Felipe. So, well, bringing a different concept that we have discussed together, we have mentioned a couple of times the aspect of credibility. So, Daniela, for instance, on your side, do you think that frameworks, social bond frameworks can be further developed in order to be more transparent, more credible? What do you think could be done in terms of issuers frameworks?
I think that the ICMA framework are the social bond principle, green bond principle are already a well-established framework and a point of reference for all the issuers. The work done has been great, I think. What I see is that okay, right now almost all frameworks treat the social categories differently, separate from the green categories. So what could be improved is this concept of the environmental co-benefit of the social assets and on the other side the social of the green asset. How? What I think is that it's good to continue with separate assets because it avoids confusion on the investors, risk of greenwashing and social washing. But I think that in the future we could introduce environmental co-benefit in the asset categories, in the use of proceeds definition of the bonds, in order to identify sub-portfolios that really have climate co-benefit. I give another example. We are identifying a portfolio of loan to SMEs which are located in areas affected by natural disasters. And this could be an example identifying which of these SMEs will invest this money in order to improve their climate resilience. So use of proceeds, a better definition of the use of proceeds, a better selection process, management of proceeds, and of course also in the reporting side. So identifying since the beginning, putting in the framework which will be the KPI to be reported. Because now, in my experience, we are an Italian bank, as I told, is that we have just started to see, to analyze social co-benefit and environment co-benefit. And doing this, and we will put the result of this analysis on our next reporting that is going to be published. Starting to do this exercise, what we saw is that there are portfolios that by nature can have social co-benefit or environmental co-benefit. So I think that we should better identify in the framework since the beginning. That is what I see.
Thank you very much. On your side, Lorenza, some kind of changes that you are introducing in your framework in order to reflect and be more intense, I would say, in the reporting of the indicators that are linked to benefits?
Well, as I said before, first of all, we will keep to disclose social co-benefits within our green bonds. We are thinking about maybe further social indicators on this part, on the green bonds. On the social side, I will take the chance of this panel on reflecting to what we can do more on this from our side, because I think, again, as I said before, it can be a real tool that can help both issuers and investors to better classify and to better also for a better comparability of between ESG bonds. I think that's at the end being, at least for CDP, being a company that have this very multidimensional mission from social initiatives to, of course, all the energy transitions field. We can really do this work. Of course, but it is, I think, by default for everyone, there is difficulties on gather the right information to report regarding some investments. So I'm not saying this is easy, and we will go into to do that tomorrow, because we are fully aware that for many issuers it's quite difficult to gather more information, especially on the social side and in some cases, and on the green and environmental impact on other investments. But this is something that we will look at it.
I fully agree that it's not an easy exercise at all for issuers. And in that sense, well, and resources are limited, of course, for every institution. But maybe Felipe can help us a little bit on establishing priorities from an issuer perspective when you describe what would be, the most interesting outcome or most interesting new reporting that you would appreciate in the issuers reporting.
Yeah, I would say that it's very important to have a complete allocation and impact report using all the frameworks that are available in the market. We have, the harmonized framework for impact reporting from ICMA Green Bond Principles. That's an incredible framework to actually help issuers to structure their impact, so it's very important. Then, as I mentioned at the beginning of the discussion, the question around the clarity of purpose or the coherence towards the strategy. I think this is very important, especially for those issuers who are not MDBs or development agencies. And third, but maybe that's the tricky question, is I like those impact reports in which there is an effort to actually track impact and not only outcomes of projects. Like, in the social space, we are used to see number of beneficiaries for every single project. But, we know that impact is more complex than that. That you may want to see, okay, how many of those beneficiaries are actually out of poverty, or how many of those beneficiaries have actually increased their salaries, their wages. So I think that means resources. Of course, there is no, we have this discussion every single time around greenium, or I don't know how you call it for social. Socium?
Difficult to
socium. We don't have socium. So yeah, I think someone needs to pay for that. But, in an ideal world, we like to see more, not only outputs, but also impact metrics. And then just going back to the discussion on the co-benefits, I think that's a very positive driver for growth in the market, because that will increase the interest from different investors to see, okay, I'm buying a social bond, but hey, there is also some environmental co-benefits. So I think that's an important development. And maybe another way to increase growth in the market could be, maybe that's science fiction, but maybe it could be a solution to increase the size of the balance sheet of MDBs.
Well, that's another debate.
And by the way, if I may add there, just to the impact, yes, that reporting on that data takes resources, but it always also, especially on social, will take time because you don't see the impact immediately. You will have to wait several years before you see it, and that is a challenge.
Absolutely. Well, being mindful of time, I think we still have a couple of minutes, and there's a last question that I would like to ask to every panelist. Where do you see the social bond market in 10 years and how it will develop? I mean, it's science fiction, maybe in terms of a question, but well, we have the example of the 10 last year. We started well, with many difficulties, but now it's a sector of the market that is existing and with some traction. What would you expect for the next 10 years? Maybe starting with Lorenza.
Well, ideally, as a market participant with a bit of experience on the sustainable finance market, I would prefer the market to evolve on a more integrated and holistic approach on the ESG matters, rather than to further fragmentation between labels or taxonomies or further specific regulations. So I think that the market is today still structured around distinct categories, and it's good because it helps to make the purpose clear. But we've seen that the underlying projects are most of the time multidimensional. So I think that the objective could be to develop instruments that can gather all these dimensions. And I think also the market is mature enough to avoid green or social washing without the burden of further regulations in this sense.
Thank you. Eila, maybe on your
Well,
side.
I don't know what it will be, but I know what I would like to see. A bigger market where I think growth could come especially from municipalities and cities, because they will deal with lots of these issues and with the consequences of them not having been dealt with. So I think some sort of roadshow and marketing to this community would be called for. Do social funds, whether it's a loan, whether it's a bond. I mean, we have green loans and green bonds and green bonds made of green loans. Why not have the same on social? Perfectly possible. But it needs to widen because now it has been largely an MDB business, which is fine. They are usually the trailblazers on this kind of business. But I think we need to widen a little bit the scope. And there we may also run into issues of size, because bond market requires a certain size. But we need to make people move and understand that when you do this kind of, for example, if you're a city, you do this kind of thing, for example, in your flood management, you could label that a social purpose and just benefit from this. I think we need more material. It can't be just a handful of MDBs and maybe some public sector banks, financial sector who is doing this. So I really would like to see a much wider participant, because it's there. We need to do these things. Somebody will finance them. Why not label and use the label?
Thank you very much. And the investor view of for the next 10 years.
I hope we will need a new pandemic to see the social bond market grow. That's my hope.
First wish. Yeah.
But my first wish. And then, yeah, well, as I mentioned before, maybe to see more an increase in MDB's balance sheet, SSA's increase in expenditures, and maybe the second one will be more cooperation between private and SSAs for just transition.
Thank you very much. Daniela?
I agree on what Lorenza said, so there will be more more integration, I hope, between social and green assets. We now understood that there are strong integration on the two goals, on the two kind of benefits. So I think that the social bond market should focus more on this integration, selecting assets and granting loans to SMEs or with social main objective, but with a climate co-benefit. And my hope is that data will be gathering of data, because we are a commercial bank, and I would like to underline that it's very difficult. We rely on our clients on data. We do not realize our projects. We finance clients' projects. So the most difficult part is to get data on the main, on the core impact. Imagine what can be the social co-benefit or the environmental co-benefit. So this is my hope for the next 10 years.
Thank you very much. So with this, we will conclude our panel. This has been a panel fully dedicated to social bonds. Thank you to our panelists, and I hope you have enjoyed.